Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys very much for joining us. As always, we are so appreciative and humbled that you guys have given us the support that you do. Bobby, okay, you remember from living in Chicago. Okay, it snowed like 3 inches. Okay, I literally on the way home, it took me an hour and 40 minutes to get home from the city. I saw at least 7 cars cracked up. Oh, let me tell you about my morning going to the city first off, before we get into this. So I get on the L, which I never take the L, but only because it's snowing. I haven't taken the L in a year. Sitting in the seat, at least 20 homeless people in the car, 3 of them smoking. One guy comes over, he ambles over a homeless guy, and he says, I'm sorry, can you think you could move? That's kind of where I like to take a leak. Swear on a stack of bottles. And then we get to Addison, the car shuts down. It's 25 minutes later, the lights are off. I realize I'm the only one who cares because everybody else just lives on the L. It is.
So, you know what's funny about that story? So I was looking at a post by, I don't know who, but they were showing the Bears' potential new stadium for the lakefront, right?
Yeah.
And the rendering it's freaking gorgeous, right? And they're going to have glass on one wall of the stadium so you can see the skyline when you're in there. And new public space of parks is going to be in between the colonnades of Soldier Field, which would be so cool. And I'm like, this is great, man. It's classic, beautiful stadium for a beautiful city. And then you mentioned your L ride on Twitter, and I'm like, yeah, that's why I left.
Yeah, exactly right. And the Bears should leave too. Virginia died last week. May she rest in peace. I think the Bears are moving to tonight. Which, by the way, this show, if for you, this is your first time tuning into the show, yes, it is a show about economics, about finance, and about trading. Sorry that we sometimes get off on a little bit of a tangent. I hope it's okay. One thing we love about this show is all the interacting we get. You guys who are watching live, please feel free to send in your questions. We love the questions. We have some really, really smart people who watch and some funny people who watch. One thing I've always said about Bobby and I, we've been in the public eye in media for 20 plus years, each of us. You may have watched us. You may think we're full shit and dumbasses, but one thing you cannot deny is that we get fabulous guests. And this is going to be one of those times. We have one of our favorite guys, Tony Greer, the editor of the Morning Navigator newsletters of TG Macro. Let's bring on Tony Greer. Where do you live? Where do you live, Tony? Does it snow where you live?
Yeah, it snows where I live. I'm out in Long Island, man. How you doing, Jim?
Good. Nice to see you, Tony. Yeah.
Thanks for having me. How are you, Bob?
Good. Look at Rich. Do you have a black shirt deal? No, I don't, but I should.
Yes. We only wear black shirts. It's kind of an Italian thing. Genetically, we are predisposed to black. I'm sorry. I don't know why. Yeah.
Holy smokes. I just changed out of a black shirt.
What is that? It's dark
purple? I'm giving you the heads up.
My royal purple, but
you deserve. You are royalty.
Yeah, you are royalty, Tony.
One time at our restaurant, like last summer, it's like 90 degrees, and there's these 3 people, 2 old guys and like a younger son, but even like the son is our age, older than you, Tony. And they're sitting all dressed like I am in black. It's 90 degrees, drinking red wine, waiting for a table. I'm like, hey, how you doing? I knew exactly what their ethnicity was right away. Just sitting
right away,
drinking red wine. Anyway, I'm a little fired up because of my trip home. Well, my trip to work and my trip home from the city today. So I'm going to now start talking about finance and economics. You saw that print today, right?
Yeah, man.
What did you think?
I love it. I kind of welcome the volatility. You know, that's a, this hot CPI is something that the market is going to contend with. It's going to be something that probably sets it back, when bonds dislocate lower, rates rip higher. Stocks tend to struggle a little bit. So I'm riding this bull market, Jim, but I need opportunities like this to get into the sectors and stocks that I want to get into, so it's all good with me. I don't think it's going to derail the bull.
So, okay, good. That was going to be my second question because my thesis was that the first 6 months of this year was going to be difficult. Even if we think we're transitioning from what I considered crappy fiscal and economic policy as it relates to the corporate sector, which, by the way, that's not political. They literally run on regulation, whether it be for the environment, whether it be on anything. That's what they say, not me. Barack Obama literally said we want to rein in corporate excess. I'm pretty sure that means rein in corporate excess. But anyway, I thought even though the transition was going to be to a good place, it might be rocky and we might have, I don't know, even 10% of the downside. Do you think that that's possible?
I mean, I don't like to rule anything out, right? Because I'm a trader.
Possible was the wrong word, right?
Yeah. So do I think it's highly probable? I mean, I as a bull, I'm going to say I don't see a 10% spill coming. I really don't. I'm excited by the sectors that I saw respond when Trump broke away from Kamala in poly market odds, and then again when he won the election. Because those rallies, those sectors that broke out then are still going. The sectors that were at the top of the leaderboard in January were the ones that took off as Trump broke away from Kamala in the polls. So those are gold miners, cloud storage, social media, internet. And when those kind of get through the whole Trump transition, get through inauguration, and they're still rallying, I can have confidence that this bull is still alive, and this is no longer the chances of like the Costanza trade happening where Trump gets elected and stocks back off. I mean, that ship has sailed.
I didn't think my wife was home. I just saw somebody run by the door.
I think you have a ghost in your house. So let me ask you this, Tony, and I'm going to take the other side of that briefly. I've said multiple times before the election was, well, not before the election was over, after Trump won, I've said multiple times, I expect, okay, I'm leaning towards there being a 15 to 30% drop in the equity markets at some point in, let's call it the next 2 years. And I think that will be a generational buy. Like, I think that will be the buy of all buys. That will be the one we're talking about 15 years from now. And hear me out. The reason I think that was kind of illustrated in today's CPI. So Trump is already saying, we got to get the Fed to lower rates. We got to get rates down. Now, that's not his focus right now. Right now, his focus is waste, and his focus is immigration and things like that. But today we got a hot CPI number, and Jimmy will vouch for me on this as well. I've been saying for a while now that inflation is not dead. So if I'm right about that, and if inflation is not dead, and if we have Trump doing all these growth policies, right, and then potentially pressuring the Fed, I don't think they'll listen, into cutting rates at the same time, I could totally see a situation where stocks don't react positively to the effects of what Trump said he would do, what he needs to do, and what the three of us are happy he's going to do. I could see a negative stock reaction to that. So my thesis is if Trump is successful, it's going to hit stocks, and then that we need to buy the hell out of that. So what's crazy there and what's not crazy?
Nothing's crazy, Bob. This is a market, right? So absolutely anything can happen, and we respect that at all times. So I honor your view. If I had to push back, I would say,
Please do.
I just think that the bear market in bonds for the last several years, I think, has been driven by the sort of deterioration of the dollar, of spending power, and really of the fact that we did something major back in 2020, what was it, 22 or 23, when we took Russia off the SWIFT system.
Yeah.
Right. And then all of a sudden, treasuries kind of had a different complexion after that. I think every central bank on the planet said, we better diversify because they could do that to us. Right. So that's kind of what sold off treasuries, gave gave gold a bid. And so I feel like it was the deficit that kept spiraling out of control under Biden, like in crazy ways. Not that every president hasn't, spent money, but, getting to 36 trillion. And when that data becomes like debt porn to public society, the overlay is, oh God, there goes the treasury market,
Yeah.
So for me, like, that was kind of something that I can tolerate. And now in this new regime, I just think that everything is going to be so different. When you look at what Elon and Doge are doing, that stuff is like, and he just tweeted about it today, which I really like. He tweeted about interest rates today, right? He's saying when we cut all of this fat and all of this waste and all of this crap out of the system, it's deflationary, essentially, is what he said. Rates are going to come down. And I believe in that. I believe that, our credit was getting a bad reputation for having a runaway debt spiral. And the only reason that it was kind of standing up versus the rest of the global bond markets is that we are, the fastest dump truck in the race or the best credit in the race. So the U.S. treasuries are going to carry a premium to the other nations. I just feel like we're gonna sort out our fiscal mess. And I'm really excited that a guy that's appointed like Scott Bessent is an absolute optimist about our ability to grow our way out of this deficit.
Okay.
So
Okay,
that's my
because
pushback, and I don't know if that's going to work either.
Because that's the only possible way, though, right? I mean, we can't pay this deficit off. We have to pay it back. We have to grow our way out of it. In some ways, pay it back in cheaper dollars, which we've tried that method, which I hate. I'd rather do it with valuable dollars that we have more of because of an economic boom. So I was impressed. I saw Elon Musk tweet that. And I've been saying for the last 3 months that I could see a scenario where taxes are cut, corporate and personal, those others extended. Tax receipts start to go lower, although tax receipts have gone higher, I believe, in the first quarter so far. Tax receipts go lower, deficits blow out, but the world's appetite for our bonds increases, doesn't decrease, because they can see an end point to what the plan is. If we are literally going to deregulate, we're literally going to cut spending, which, by the way, very difficult conversation with my daughter in academia today, who some of her professor friends, people who are studying to be professors, are having their funding cut. She's not having her funding cut. And she's all despondent about it. I said, you have to remember that I believed that we were on a path that could have caused a great and calamitous event, the kind of event that a lot of people suffer. But anyway, do you think deficits are going to blow out on the short term? And do you think that they'll still buy our bonds?
That's a hard conversation for me because I'm not an economist, Jim, about deficits, things like that. I do, I kind of just stick to the tape.
Good. Let's go with the tape then. Yeah.
Yeah. I stick to the tape. I stick to the fact that, since the inauguration, or even before then, since the election, the S&P really has been range bound. And I think that what it's doing is sorting out the winners and losers of the next regime. All of a sudden, gold miners are at the top of the year-to-date leaderboard. For the last 2 years, we were chasing semis up a flagpole. Now we've got some cyclical sectors like financials and broker-dealers and airlines that are all absolutely up a rope since Trump got elected. And I feel like the world is still underinvested. So I totally got away from your question about deficit.
No, that's fine. That was deftly done, by the way. You should be a politician. That's what we're supposed to do in the media game. If you don't,
when I have no idea what the fuck I'm talking about, I change the subject.
Neither do any of us. Just keep talking and use your hands a lot. Point your finger.
So yeah, so that's what I say. I go back to the tape, and if we get through events like this, where the treasury market and the treasury market and the stock market are all obviously under pressure, you get through events like this and realize that this is just an adjustment along the way. I agree with you that I think there's going to be leftover inflation from the Biden regime. It seemed to me like Powell kept rates too low for too long.
Yep.
And now we're going to deal with that inflation, right, of the overheat. So that makes sense to me. But luckily, or not for right now, depending on how you look at it, there's not a lot of commodity inflation going on, right? The Bloomberg Commodities Index is 100, bid at 105. Everything within the commodity world is sort of balancing off. If gold's rallying, natural gas is selling off. If, the energy sector's rallying, the base metals are getting crushed because the dollar is strong. And so really the commodity sector is going nowhere. If we had a situation where we had firing commodity prices and high rates, then I'd be more concerned about the stock and bond market. We did that in 2022 when we had a negative return in the S&P, right? Down 20%. We were dealing with the headline inflation from doubling the balance sheet after the COVID lockdowns, right? Go figure, we're dealing with inflation again, right? We up money supply 40% in 1 year. We knew this was coming.
Right.
So that's where I'm looking at it. I feel like Powell did an okay job of managing us from 9% to 2.5%. And now we might get, blasts of hot data, but I don't think we're going back to a 6-7% scenario in headline inflation anytime soon. And I kind of changed the subject there.
So I'll throw something else in the mix about the deficits. We are going to have lower receipts at first. They will turn around, especially when you combine what's going on and you add in the tax cuts, right? And it's going to be, and this is part of the reason I think there's going to be this big drop in the stock market. And the second part of that is it's going to be a generational buy, because you will have a situation where we can't quite eliminate the treasury backlog. We can't quite start issuing less because we'll have a lower intake by the government, at least at first. Now, Besson's got a plan for that, and I think it's a good one. But if tariffs keep going, we'll now be taking dollars from foreign countries that they used to use to buy treasuries, and they'll be paying tariffs with it. So because of that will be another factor. If that actually is the way it plays out, that'll be another factor why we can issue less, right? Because we'll be getting dollars from there and we don't need to borrow those dollars. So it's a delicate dance. And that's why I think we'll get that sell off first. And then those of us, the three of us and my buddy Shadow Pro, will be able to see this and go, okay, it's coming. Let's see, let that bottom form. And that's going to be the one we buy if it happens.
Where are interest rates, Bob, with the S&P backing off 10%? Are they way higher?
No, I don't think so, because I think it'll result in an immediate rate cut cycle. But it won't be able to stem the initial flow, because I think people will be surprised when it happens. You know, we already had a 6% drop in the NASDAQ. And you mentioned that we're range bound, right? And that's what Mike Arnold, a technical analyst that we talk to monthly, calls a sideways correction. I'm sorry. Yeah, sideways correction. He's maintaining that this does not have to be dropped to 10% to be a correction. It's actually currently a correction, and the next move is likely to resolve higher, which I think is where you're at.
Yeah, it is. It is, especially after, you know, DeepSeek scared the crap out of me. You know, that derails NVIDIA, the number one stock and the number one sector. And you got the thing, NVIDIA is due to back off hard, right? Like total bubble stock, completely out of control, and it won't go down. Right. So I'm going to have a tough time thinking that DeepSeek is going to derail this thing. You know, NVIDIA went from 150 to 120 on the DeepSeek news and is now 132 bid. Right. So, you know, if their business model actually just had a hole blown in it, that thing would have straight lined to $80. So, you know, if the math was really coming out of that thing, but I don't think it is. So the fact that we just withstood that event and, you know, NVIDIA maybe isn't, you know, bid the highs, but hasn't broken trend at all. Those are the things that I need to happen for the stock market to keep rallying. So that's what I'm rooting for.
Okay. So in the Tradier rundown, which is Tradier's newsletter, Jim and I do a little video sort of commentary on, we talked about the airline stocks. Now, I don't know if these interest you at all, if the sector interests you, but Jim made a great point about this sort of YOLO travel thing that developed post-pandemic is not going away. And I 100% agree with him. But I also think that some back to the office is kind of gaining momentum. So the opportunity to travel will be a little bit less. And then Jim brought up business travel. So we're kind of, I think Jim and I are in agreement on the main themes, but not quite sure what we think of the sector. Is that fair, Jim, to say?
No, perfectly fair.
Yeah. So do you have any thoughts on travel in general and airlines specifically?
I mean, yeah, you gotta like that they broke out. I mean, the airline ETF went from 16 to 26 in a matter of, you know, 5 months. You know, this thing clearly is on the move. It's clearly optimistic about something. I think lower, you know, jet fuel and heating oil and energy prices generally have been good for the airlines. I mean, there's plenty of refined products around, right? There's plenty of jet fuel, plenty of heating oil, plenty of diesel and things like that. And I think that the market responded to that a little bit. And then again, I think to this, you know, to like you said, that there's a, well, I've been writing about it this way, and JD and I have been talking about it on our podcast, that there's like there's a clear wave of optimism, and there's a different feeling under this administration than the last one. You know, like you're waking up every day to wins for your country, you know, and kind of like, you know, getting things closer to normal and getting our house in order in a number of different ways. And I feel like that is the most important thing in igniting animal spirits, which, as you know, can keep a market going for a long, long time. And, you know, to me, this feels like the mid 90s when if you compare AI to the internet back then, and I'm talking about before we got to a bubble, because I don't think that we're in the 8th or 9th inning of the AI bubble at all. I think that we're in the first inning of the AI story. So if we're going to kind of develop this over the next several years, I mean, I could see us generating returns like we did in 96, 97, 98, 99. And yeah, maybe we blow into a bigger bubble and crash from there. But to me, we're still in the early phase of this sorting out who are going to be the winners, losers of AI, and how that whole complexion is going to change now.
So you mentioned gold before. So Bobby and I have been accused of being gold bugs for the last 2 years. It's one of my bigger positions, and it remains that. Going into the election, I thought one candidate was fabulous for gold, and one candidate was pretty good for gold. The one who was fabulous for gold did not win. the one who was pretty good for gold did. Okay, so then I moved on to separate stories. Central banks buying. You mentioned Russia being frozen out of the SWIFT payment systems, their dollar-denominated assets being froze up around the globe. And if you are going to be the arbiter of the world's trade, people frown upon that kind of shit, and they might divest themselves a tiny bit. I don't believe in de-dollarization. I believe in de-dollarization extra light. Okay, right. So what are the other theses that I might be missing in the gold trade? Why do you mentioned the miners, I think once or twice. Do you like them better, and why?
I don't put it this way. I've traded miners before, and as you know, Jim, like they're very, very cyclical, right? And what's amazing to me, is how I've been in them as they've gotten trashed, in terms of trading versus gold. Right. They had definitely been lagging for a really, really long time behind the gold market itself. And my thesis has always been like, the bull case is in gold, the metal, right? The fact that they pull it out of the ground, that's nice and interesting. But why do I want to buy into all of the
other stuff?
Yeah, all the blockades and like, why do I want the interest rate risk, the management risk? Why do I want the mining risk? Why do I want any of this risk? So you struggle to get me to come over the line and become I'm a gold bull, but you struggle to get me to become a gold stock bull because I feel like I've seen that be such a game of hot potato so many times where it's like, yeah, it goes rallying, we'll take gold stocks higher. All of a sudden gold stops rallying, gold stocks get mashed because everybody's there holding the bag.
Right.
And where was the real buying? The real buying's in the gold market.
Yeah.
Central banks are buying gold, right? Like you want to win in gold, be long gold in front of China and watch them take it up to 5K.
Like I always say this to Bobby and he disagrees. If you want to be long oil, just be long oil. I'm just kidding. Bobby always said no. Bobby always says this literally every other show. Bobby says, if you're a bull on oil, you buy oil.
Right? 100%.
Yeah. So I agree with him that. Bob.
100%. Because you wind up as a trader being in these trades that start not working when the commodity isn't doing anything bad or the story hasn't changed and the commodity is holding its price and now stocks are selling off and your gold miners are down 5%.
Right, there's nothing worse than being right and losing money.
Yeah, exactly.
So you're not
wrong in the end.
So Tony, you're a stock guy. You're not a futures guy. So do you ever look at commodities and go, you know what, I'm going to do some USO or I'm going to do some GLD or some Sprott Silver Trust or any of that stuff?
Yes, I run a view matrix at the end of my newsletter where I basically run a live trading pad in front of people, in front of my subscribers to kind of give them some guidance on what I'm in. And while it is not a direct lookalike to my book, it's very close. And, the longest standing position on the pad is my gold position. I have Sprott Physical Trust on there since I launched the Navigator with the view matrix in it 7 years ago. I've had gold in it. But I also currently have DBC, which is basically a commodity ETF. Yeah, broad-based commodity ETF. I trade that, when I think that the sector is going to be in favor, or at least when I want to park money there, if I think it's going to be in good enough shape. So I do trade all sectors like that. That's kind of my, that's the bread and butter of what I do for my clients. Is I pay really close attention to the sectoral race on a weekly, monthly, quarterly, and annual basis. And I try to get my clients into the sectors that I think are going to be the ones that win the race at the end of the year, if that's fair. I try to have, I get people say, okay, these sectors are going to be dead money. Let's be out of those or be short those. These 4 or 5 to me look like they're showing signs that they can keep responding in this bull market kind of fashion to what's going on. So I can do that with different sectors. I can do that with commodities, with bonds, so with the ETFs now, you can commodity trading is my roots. So I always I feel like I can have an edge sometimes.
Okay. So 2 questions. This is for both of you, actually. So I'll go to Jimmy first so that you can argue with him if you disagree.
Tell him how wrong he is.
Yeah. I am actually stumped as to where the Fed is. So if I look at, and this is a 2-part question. If I look at the CME Fed Watch tool, the next cut is now priced in for October of this year. And then they've got another one mid 2026, and that's it. And the favorability is like 4%. It's like 36% to 32% for no change. So the market clearly is like, whatever, we don't know. And I look at somebody like Cleveland Fed President Beth Hammack spoke yesterday at the Business and Economics School. I believe it was University of Kentucky. I know it was Lexington because I just like that word. And she said, we have made good progress. So 2% inflation is not in sight just yet. That's the most hawkish I've heard. Now, we just had 2 days of Jerome Powell. He didn't say shit, right? He really didn't.
No.
We're making progress, but we're not there. But we're making progress, but we're close, but we're not there. And we both know those old Humphrey Hawkins testimonies are pretty political anyway. So do either of you guys have a feel for where you think the Fed is at, number one? And then because that'll address my gold view for, if I could come to a decision. And number two, do you even think the Fed is the biggest story now?
Well, I think Fed is among the biggest stories. I think Donald Trump is trying to take away some of that fire from the Fed. When I saw the print today, 3% inflation, I think Jerome Powell is scared that inflation is going to shoot up above 3.2, 3.3, 3.5. I think he's also scared that inflation could deflate to 2%. I don't think he genuinely wants that right now. I think he knows that there's several years need to come of having a little bit higher inflation than we've had in the previous 2 decades in order to, monetize the debt, to essentially bail out some of the indebted government entities. So I do think the Fed is still, what I'm saying is this, is that the inflation is too hot for us to like. But the question is Jerome Powell going to do anything of it? Well, we're still talking about him easing, despite the fact that inflation goes 2.5, 2.93 in the last 3 reads. So we're still talking about him easing, even though, albeit at a lot less levels. So I think the market is clearly saying this. And by the way, this favors Tony's point about being a bull in a lot of these things. If the inflation is running 3% and Jerome Powell has zero intention of fighting that, that's good for commodities. That's good for stocks. And I think it is a big part of the story. Donald Trump's a huge part of the story too. And I hope we get some time for that a little later in it. But Tony, what do you think?
Yeah, I would agree. It's tough to tell, what's going on right now. I got a feeling that they're kind of, we're going to be data dependent and see how a lot of the sweeping changes that Trump is making are going to pan out in the economy. Like we're obviously at a really big regime change point. And so I guess it's not shocking for me to hear that Fed predictor has got like one cut out in October and then it has no idea. Essentially, I kind of feel the same way. It feels though that we're in that in between phase though, right? Where, okay, we got one hot inflation, piece of inflation data. Is it going to be trending that way now for the next 6 months where it's a hotter number, or is it going to be where we get something where it's just back and forth and bobbling on either side of what's expected? Like for me, then it becomes a non-issue again, right? As long as we're within now this is true with a lot of the macro markets that I use as speedometers for the bull market in stocks, is that as long as we're in the ranges of what the bond market and bond market participants have seen, that's not too stressful, right? What's stressful is when the curve is steepening into new high territory and we don't know where it's going to top out, right? We were just inverted in the yield curve for like in a record period of time. We finally steepened out of that negative boundary, and now we're in positive territory. But are we going to go to 50 bips or 150? Right. So that's kind of what I feel like is the big speedometer now on the stock market, where if the interpretation of what interest rate's going to do changes so much that the curve steepens that dramatically, that's a thing that I see as being a risk to the stock market, to something where I would actually say, let me make a sale and get out of the way of this until the yield curve stops driving higher. Because
you're meaning that potentially the Fed would be panic moving rates lower on the short end.
Yes.
Okay. That makes perfect sense to me. I have a quick follow-up question, and then it's all yours, Bobby. You mentioned DeepSeek before, and the stock market took a punch, particularly NVIDIA took a punch, and they handled it pretty well. I have this theory that's in beta mode that I'm testing out, is that I believe this. I believe the more shots the stock market can take, it almost galvanizes it. So Donald Trump being a headline risk to the market. The Monday tariff tantrum was a perfect example of this. The more he shoots his mouth off, creates volatility, because I think that bear markets and sharp corrections are born of complacency. And you can't be that complacent with the Donald Trump in office. So it begs the question, will people start hedging risk more and make this a more durable bull? Because, and by the way, I am not for the president of the United States making comments off the cuff that create volatility in any markets. But if he is there a positive that could come from it?
So yeah, there's a lot to unpack there, Jim. But I think on the Trump comment thing, the one thing that he, I think, is good at is that he just blows the Overton window open, right? Where he said he just comes out and is like, yeah, we're going to slap these tariffs on them, and whatever the other countries have tariff on us, we're going to slap that on them, right? That's the market. I think that he knows that that's the market atom bomb, right? That's the first mushroom cloud to where it's going to send stocks in all different directions and sectors and bonds in different directions. And then once the dust settles on that and everybody calms down about what it could potentially mean, then the market, then everything adjusts again, right? So I do agree that it's a little bit troublesome, and I'd rather it not be the case that the president was not pushing the tape around. I really would, but you're not going to tell him that, right? So now we're gonna live through the, oh shit, another Trump headline. What's the stock market doing? And am I about to get run over?
Right.
Stuff like that is going to happen. But what I think, though, I think he knows that it causes an initial burst of volatility.
Yeah.
And like with the other things, like once you find out where the extreme is, like where was the low on the S&P when he threw the tariff tape bomb out there? Okay, so maybe that's as bad as the S&P gets.
It's interesting. And I agree.
So it's a little bit of just
Bobby, let's run the banner real quick. Luis, can you run the banner real quick? You guys, we so appreciate the support you guys have given us watching this show too. Special offer from Tradier. If you haven't seen it yet, you must see it. Tradier Pro, which you get a free, is it 3 month?
3 month
trial of, is a really important tool if you trade options. We've had options traders, professional option traders on this show who didn't even, we get sometimes guests don't even know it's a Tradier vehicle who'll be like, oh yeah, no, that's all I will use. That's how I price options. That's how I price strategies. Please check it out. Click on the link. Try it for 3 months. Absolutely no obligation. If you hate it, forget about it, but you won't hate it. That's all.
It's one of the cool things about this show, Tony, is that like you and I were chatting offline, and it was like this is a no BS show. Tradier doesn't make us do anything. They're just do your show because they know they have a product. Like they know they have a superior product in terms of stock options and that sort of thing. So we're really happy to be working with them. So to the Trump thing, and this is, I know I keep pushing this same thing, but I'm wondering your guys' opinion of this. Does Trump have, I think Besson does, but does Trump have the playbook for hotter inflation that we all three agree is leftover inflation? I've been saying it since before the election that inflation wasn't done. By the way, so has Jim Bianco. I could even say I stole it from him, but I think he stole it from me. That inflation wasn't done, right? And so there's leftover inflation along with animal spirits and all this other stuff we're talking about that come with a Trump win. Does he have the playbook to say, yeah, actually, guys, I'm sorry, rates have to be a little higher right now? Or does it all go back to the cutting the spending, rates go down naturally on the long end? What do you guys think about that? Either one of you.
Tony?
Yeah, I mean, I just think that the stuff that Elon is doing is God's work right now. And I feel like if we get it, right? If we get a headline for our children kind of thing, like if we get a headline like where our deficit or national debt starts ticking down, I mean, I don't know if it can technically, I don't know if it can tick down, but say it goes sideways or we get some kind of a massive relief. He cut XYZ billion out of spending, this and that. That stuff is going to be deflationary. Treasuries are going to rally on that. They're going to rally on that because it's deflationary, and they're going to rally on that for the flight to quality product of, holy smokes, like, the best credit on the board is now improving its credit. So I feel like that's bullish for bonds, and rates can go back down into, we're kind of at the top of the range now in 10s. So maybe in the middle of the range, around 4% or something like that of the wide range. And the stock market will love that.
Yeah.
And so those are the scenarios that I'm hoping for. I really do think that, the market is getting caught up in a lot of the media just snapping away at everything that Trump does and all that, and it doesn't make sense. You know what I mean? Like the tariffs, they're not going to end our economy. They're actually, read about what Andrew Jackson did with tariffs. He erased the national deficit, collected tariffs, gave out the extra money to the states to use as they needed. And it was a home run for the country. Right? Like we're not living in the same period of time, but I can't just put on the radio and say Trump instilled tariffs, so they're bad, and Orange Man bad still. It's like all that stuff is just nonsense.
Doesn't it seem like look back at what happened in 2017 when he imposed tariffs?
Yeah.
Inflation actually dropped. Jimmy, you got anything on that before I ask another question?
No, I'm actually fine with that. You ask another question. Yeah.
All right. So,
which means I totally forgot what I was going to say. So that's why I probably can't run for office because I'll be in the middle of a speech and be like, no, you go.
Should we
But
sit
it's a
for
no
a
bullshit
second?
zone. It's a no bullshit zone. That's why
Yeah,
it
let's
works.
just sit for a second in silence while you think about it.
Yeah. Yeah.
All right, that's not going to work. So in terms of sectors and stocks, right? I'm going to name one and you tell me what you think, and then you tell me if there's anything you're looking at. And before you do that, tell everybody again the name of your newsletter and where you can get it if you want to go into costs or special promotions you're doing. We don't get anything. This is a promoted show, so paid for show. So there's no discount link or anything from us.
You guys are awesome. So I write the Morning Navigator newsletter. I charge $800 a year for it. There's a great deal that's out there now. Jared Dillian and I do a podcast and
Love
sort
Jared.
of, you know, not I don't call it competing with you. I consider it sort of creating content with you guys, you know, because we're very much on the same level. I watch your show religiously to get ideas for mine, quite honestly. And so we're selling a subscription package for the 2 of our subscriptions, which is the dual sub, for $1,200 for 2 subs. So it'd be $600 each. And that's on the Macro Dirt podcast website or on our own website. So that's where you can buy our newsletters, and we're going to keep doing the podcast like as long as you guys are, you know, like we're planning to be part of the new financial media package. Right.
Mhm.
And I feel like the door has been kicked wide open for that, especially under the Trump administration, where we're probably not going to get censored quite a bit as we were during the last one. So that's where I see the opportunity, and I'm really excited about the prospects for both of our podcasts and mine and Jared's newsletter, quite honestly.
Yeah. So number one, Jimmy turned me on to Jared. I didn't know about Jared, and he's brilliant. We've had him on a couple of times.
Yeah.
On multiple shows and pitched this book. And you came sort of through that funnel. So it's sort of like you're like the McAfee coaching tree. It's like all the good guys come out of that same tree. But no, we're not competitors, and people need to understand that's one of the great things about the new media is we support each other. We're not trying to get you to watch our show and not yours. We're trying to get you to watch all of them so that you get all the information you can and make the right decisions.
You guys to me are like another floor trader to talk to, right?
Yeah.
Like I don't have access to that. I need you guys because I need to hear what the floor traders are thinking. You know what I mean? So that's why I feel like we're a good complement for each other.
Also trying to drive legacy media into the dust too. So we're joining that goal, correct? Like,
yeah, that is the objective. Absolutely. Like when they're off the board.
Yeah, getting my laundry from the dry cleaner. That's
now we're talking, Jim. Now,
yeah, okay, good.
This is why I like to be here. Exactly.
All right. So
tell us how you really feel.
This is going to make a friend of mine mad because he reached out to me last time I mentioned this, but that's okay. He's a buddy. Palantir. I like Palantir. I bought Palantir in around November of last year. And then I was asked for my pick of the year by an ex-Bloomberg guy who does a yearly thing every year, and he calls me for it, and I picked Palantir. Now, obviously, they were up triple digits last year. What do you think about the stock going forward? Do you think anything about it?
I don't know a lot about the stock. I mean, if Peter Thiel is still running the company, you know, I wouldn't fade the thing with all the money and with anyone's money. And I'm not a single stock specialist, though, Bob. I really am not. You know, there's only I always say this, like, I don't find single stocks, they find me. Gotcha. Meaning, like, I don't go looking for individual stocks to invest in that fit some kind of a screen or anything like that. But when I go and spend $1,000 every time I walk into Costco since I had my first kid, I buy that stock. You just reflexively, you know, and there's a couple of companies like that I'm invested in because they're things that I use or believe in, you know, and things like that. So kind of it's when a company finds me, that's when I like look into the stock and say, maybe I should be invested in this. So yeah. I'm not a jack of all stock trades, but I'm good at sector trading.
Speaking of sectors, so I expected you to not have as great things to say about the AI trade, the Magnificent Seven trade by extension, but it sounds to me like you still think that they could be the potential leaders throughout the rest of this year as well. What signals are we looking for to think that trade is on again?
You know, Jim, I look at it like I got the signals when I was jumping up and down in November saying, like, guys, watch these 3 sectors of tech right now, like internet, cloud storage, and cybersecurity were all trading sideways for the entirety of last year. And as Trump won the election, they broke out of a flat top and took off, right? Those sectors of tech were really important to me because now you can see how the rotation will be something where Semiconductors, which are up like 200% in the last 2 years, will be a source of funds for these other sectors of tech that were consolidating for a year within a bull market and then just broke out in November, December. So to me, that's still a sign that the tech market is very much alive. You see social media, freaking, Zuckerberg is on a 17, day streak.
Yeah.
Literally unbelievable. It's the longest NASDAQ streak since like the early 90s. If a NASDAQ stock has ever beaten that. So the money is still coming into the sector, like that's kind of how I'm judging it. And when I see, well, I don't know if this is necessarily part of the tech conversation, but when I see other sectors jump into the race for the leadership of the year, like broker dealers, financials, airlines, and transports all did last year, from, being up a couple of percent to boom, Trump got elected. They're on the leaderboard chasing down semiconductors, And so to me, those are the ones that are going to be the ones that have gone in motion and stay in motion potentially for a good portion of the Trump administration, or until this equity game changes and turns on its head somehow, which I don't see happening either.
I wish I could tell you guys that are watching this show how to get in the chat. I glance at X every once in a while, and there's a question from Linda P. It looks like it was 14 minutes ago. I hope she's still listening. And it's basically,
of course she's still listening. Why would any sane person hang up?
Nobody's clicking out.
I mean, Jesus. Especially because you disappeared a couple of times, Jimmy. So she's probably still on.
Better that way. It was just my mic though, right? But anyway,
yeah, you're good. So anyway, it's back to a gold question. I think we can all three take a shot at it. I'll do it really quick. I was buying GLD, GLDM, and minor AEM periodically over the last year. Has it run up so much to not buy more? I'll say that my particular rule, and then you guys can comment, is there's no such thing as something having run up too much. There is a time to maybe sell some calls, covered calls. Maybe there's a time to like cut part of the position and wait to add on a pullback. But my main thing is that we're getting a resumption of inflation, and the Fed's not fighting it. And that's a tailwind for gold, because gold is an asset. And if inflation rises and the Fed doesn't fight that inflation with higher rates, it's my belief that gold rises continually like other assets would, which is stocks, land, real estate in general.
I'm perfectly comfortable with that. The gold trade is fine. When we took out those highs from a couple months ago, I thought it was a great sign. I put on a fly that kind of pins 3,000 within the next 2 to 3 weeks. I have a call fly on for that. If you guys want to know what that is about, just contact me on Twitter and I'll tell you exactly what it is, or I'll just give you Bob's home number and you can call him. But I think you're 100% right. I think that the story for gold remains strong, and it is because that inflation is going to run hot. And like I said before, I underscore this point again. We had a 3% CPI today, and the market started taking out some of the eases. Nobody's talking about hikes. We're talking about eases still.
Right.
So it's like not only not fighting it, the market is deciding whether or not he's going to fuel it more over the next year. So yeah, I think that gold is a fine trade, Tony.
I might be even more, when I look at gold, from 30,000 feet up, gold was another one that was sideways for 3.5 years, right? From 20 through 23, we couldn't get through that $1,800 top, right? Or whatever it was, something, in and around there. And then it took 3.5 years of trading in this range of, I forgot what the bottom of the range was, like 1,400 or whatever, but we were in that range for 3.5 years. And to me, when another sign, when a security is in a bull market and consolidates for 3.5 years and then breaks through the top side, I'm going to tell you that I've seen them rally for 3.5 years. So that's what I think.
That is a great comment.
I think that we're in the middle of, we're in the first year of a potential 3 to 4 year gold rally. So this is the one, to me, continues to prove itself with price action, continues to prove itself with performance. And, the thesis is still there because to me, gold rallies as an expression of the death of fiat currency, more than any.
Good. So this is something that I want to add in here. Can I have 1 quick second? Then I'll get back to you. One thing we're looking at, like everybody tries to identify bubbles. I saw someone was calling it the everything bubble. Put this in perspective. 3.5, 4 years ago, the dollar has lost about 35% of its value just in 4 years. Every asset that's priced in dollars they don't go up 35%, has to go up approximately 50 cents compared to that 35% decline in the dollar. So you say gold, and gold has been higher than that over 4 years because gold is attracting favor, but it's not up as much as it seems. It is reflecting the weakness of the dollars that it's priced in. So I don't worry about bubbles. Bubbles are characterized by mom and pops mortgaging their house to lever up on a certain asset. I don't see that at all. And by the way, that thesis doesn't just go for gold. It goes for stocks. It goes for real estate. It goes for all the shit.
I got a comment by our buddy Tim. Tim's a friend. My wife and his wife are friends. And before I talk about his comment here, I also want to point out two completely unrelated things. Jared Dillian just called Tulsi a socialist on Twitter. I happen to be looking at it, which cracked me up. And then also, I'm a huge Tulsi fan. Jared and I have never talked about it. But also, Mariah Carey's been nominated for the Rock Hall of Fame, and I don't think she's rock. Anyway, Tim, Torsten Slok and Bianco, I think he's saying, think the Fed is tightening by summer 2025. You guys got any feel for that, or it's just where price action goes, it goes?
I mean, it could be, if CPI keeps trending in this direction by 2025, which I don't see it. I kind of feel like the inflation story is still kind of bubbling under the surface, but it's also kind of set off by a lot of other things like cheap energy and things like that. So I don't think that we're going to see the headline inflation that's going to be necessary to scare the crap out of the bond market again, like we saw in 22. So, the gold thing for me is like we're still in good shape in a bull market. And the other thing that I was just going to add with the sort of death of fiat currency comment is that it's gold and Bitcoin.
Hell yeah.
Right. And Bitcoin is the obvious other choice. And if you look at the inflows, I mean, there have been in the 1 year that we've had a Bitcoin ETF for, there's already $32 billion of inflows into that. Now, if that's not expressing the desire to have a currency hedged, I don't know what is. I mean, they're literally those people. Those are real institutional dollars coming into the Bitcoin ETFs because they don't want to actually own the crypto, but they want the exposure to an alternate currency. So to me, that's the story behind gold and Bitcoin. It's a depreciation of fiat currency story.
So I will say this. And I think Torsten Slok and Bianco are confused because the Fed should be hiking in summer of 2025.
Oh, that's a great
point. I don't think they will. Which, by the way, Jim
Great
Bianco,
point.
I know watches the show. He talks to us about it too. Every time I go against what you say, I know I get a shot to the nards. There, I worked in nards. I told you I would, Bobby. Every time I go against what you say, but that's not going to stop me. I can't just be a fanboy and do everything Jim Bianco says. But every time I disagree with them, I'm usually wrong. But I say they're not going to tighten in this summer.
I've not been pulling my weight in that shot to the nards thing that you're
if we're really going to be together on this, we have to really,
No,
Tony, will you commit to trying to bring back nards?
What is nards?
Nards is a word we used to say in the 70s. Like, he took a shot right to the nards.
Oh, I bring that back. I love lingo like that. Yeah, I'll support that in every way.
Jimmy you muted yourself again. Nards is like Jagoff. It's uniquely a Chicago thing, right?
It is, yeah.
Like it was one of the best things about Casino is one of the things people don't know about the movie Casino, I'm sure you guys do, is every time they said back home, in other words, the guys from Detroit, Cleveland, Kansas City, and back home in Chicago. And there's a whole story about how they had to get the okay from the Chicago outfit to make that movie. And that was one of the conditions is they could never mention Chicago. So they called it back home. And I could literally line up almost every one of those characters with a real life gangster from Chicago.
Oh, the Spilotro brothers.
What's that?
Yeah, the Spilotro brothers, right?
Spilotro is what's his name? Is Joe Pesci, yeah.
The Joe Pesci character.
Yeah. And
so my Uncle Carm, he's my cousin actually. He owned a lot of cash businesses and was very tight with all those guys. I think he did a little bit of money laundering, perhaps, but he's dead. So yeah, right.
Remo Gaggi was Joey Aiuppa. In one point when he's like talking real quietly with Frankie about how the gorilla's asking if you're banging the guy's wife. I'm not going to use all the words, but it's Stockyard just said again with the mob. Anyway, he goes out. Yeah, the gorilla's asking if you're with De Niro's wife. There was a guy named you remember Johnny Monteleone from The Floor, Jimmy?
Sure. Yeah.
His dad was Johnny Apes Monteleone from the Cicero crew. That's the gorilla. So there's one-to-one guy. So in that, I'm digressing a lot. In that, he calls people a jagoff over and over again because Pesci was actually really trying to get the Chicago side of it, the accent, and he used the word jagoff, which a lot of people didn't know unless they were from Chicago. We do have something, Deer Point Macro, who's a friend. Deer Point Macro says, question for you guys. Is this the Deer Point Macro or is this a different Deer Point Macro? Looks like it's the. Quick question for you guys. With tariffs worry, don't you think commodities impact is oddly muted? Maybe Chinese weakness weighing on demand and keeping prices from moving higher, just to guess. Anyone? I've got an opinion, but anyone want to go on that?
The one thing I would add to that you have to keep in mind about commodities is that we just went through this period, or we're still going through this period where the AI computer data center energy generation story is in the early stages, right? We had who partnered with Microsoft partners with 3 Mile Island, right? Because they're going to use them nuclear power to power their data centers. We saw uranium miners run up on that. We saw natural gas run up on the idea that we were going to be powering AI data centers and things like that. So that the air all just came out of that trade a little bit with DeepSeek, right? So that's a direct hit to the commodity market right there. And so that's just keep in mind. I'm not saying I have a great answer for. I do agree that the commodity move is a little bit muted. I'm just saying that that's one of the things that it's swimming upstream against right now.
Yeah, and I like his point about China. I think that having China with kind of an iffy economy, Germany with an iffy economy, I think those kind of things are maybe keeping it down a little bit too. But I was surprised that copper had a really nice move today, by the way. So I don't know what that means exactly yet, and if it means that I should be starting to increase my uncomfortable long position in copper, but I'm considering it. But I like his point on China, Bob.
Yeah, I like Deer Point's point that it's muted. And I think that's because the entire commodity story is somewhat in flux. So to me, it's muted in a bullish trend, right? And I'll use copper as an example. Are we still going to have big electric car demand, or is that going to be muted? Is that going to mute the domestic demand for copper? We're going to do drill, baby, drill. Obviously, that's going to take 18 to 36 months to actually produce supply. But do we all think that Trump is going to leave OPEC alone and not pressure them? No. And then the tariff effect to me was muted as soon as Canada and Mexico blinked. As soon as Canada and Mexico blink, people are like, yeah, you put the tariffs on, but I'm sure they'll be gone in a couple of weeks or a couple of months. So I just think there's a lot in flux. Go ahead.
The Mexico-Canada tariff story was about fentanyl. Right. I don't think that he was trying to actually create a tariff war with them. I think he was just, applying the leverage that he had to get them to do what he wanted them to do about the fentanyl crisis. The next day, Mexico has the biggest fentanyl bust in history, and then they send 10,000 troops to guard the border. I mean, he's just
winning
them over.
Yeah.
Right, winning.
Yeah.
Right. What'd you say, Jim?
It sounds like winning. Right?
Yeah. He's doing what he said he was going to do.
No doubt about it.
Yeah, it's
fentanyl crisis, which we don't talk about enough on the show, man, is unbelievable. I've had three different friends whose kids have died from fentanyl. I mean, I know several people. Yeah, it is crazy.
I will say this also. Deer Point is a very smart guy, so him saying that, that part of that is his opinion. He doesn't just ask a question. He asks a question with an opinion in there to a certain degree. Yeah. So take that for what it's worth. But yeah, totally agree on the fentanyl thing. Why that has not been at least issue 1A for every single population or for every single politician. It's crazy to me.
Yeah. But it's funny that we're really focusing on the actual real problems. I think the metabolic dysfunction problem in our country, i.e., everyone considers it the obesity crisis, but it's not the obesity crisis. We've done shows on it. It is metabolic dysfunction. It is an enormous problem. The fentanyl problem is an enormous problem. And these are economic problems too. Like, people understand if they are focused on the right things currently, they might like making a law that whatever the straws thing was, I can live or die with that. I can live without that. I think it's mostly just trying to piss people off. And I don't love trying to piss people off. I know a lot of people in the background are like, yeah. Bobby, you got anything else, or should I play them out?
We got one more from Timmy in there. And his question is, any thoughts on Chevron laying 15 to 20% of its employees? So
how did the stock react to that? Because I saw the headlines. Anyone know?
No.
Why, what?
I saw the headline. I wanted to know how the stock reacted, and I didn't have time to look because I own it.
I don't know, Tony. Do you have it in front of you? I'll just make some comments.
Stock's down a little. I mean, the stock, it's in the middle of its 150, 160 range. So
nothing huge.
It's not a no, it's not breaking trend or anything like that. Stock looks like it was off a couple of percent today.
So essentially, like it's not that large a number of workers, but it could be a trend. It was like 6,000, 8,000 people, which is big for Chevron and not necessarily big for the space and not necessarily big for the overall economy. But I think that, when you're talking about profitability and things like that in the stocks, these trends tend to follow each other. And that's why I brought up the trend of working from home kind of slowing and the trend of back to the office picking up steam. We have in my view, absolutely no stress in the labor market showing up in jobless claims yet. And this is where we have to worry. And that's why I'm glad Tim brought this up and I wanted to talk about it. Manufacturing and industry is where the vast majority of layoffs are if we're going into a recession. So to me, this means nothing on its face, but if this starts to be a trend in these types of industries, to me, it means quite a lot.
I agree. All right, let's wrap it up. Tony, last time at TG Macro on Twitter. Yep. That's it. Boom. We put it up there. You are the editor of the Morning Navigator newsletter, which I have read it, and it is fabulous. And we appreciate that. And we appreciate you being honored. Thank you so much. But more than that, we appreciate you guys watching. Remember what Bobby and I's mission was? We both were in legacy media for 20 plus years. And every time there, we were at the whims of some overzealous producers or sponsors, and we couldn't always say exactly what we wanted. As you can imagine, for guys like Bob and I, that's a little difficult pill to swallow. We like to say what pops into our head, and we don't like to be filtered. That's why we want it to be Finance Unfiltered across all our shows. Thank you guys very much. We appreciate it. This is Tradier, the Trader's Edge. I'm Iuorio. That's Bob Iaccino. That's Tony Greer.
Thanks, man.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.